Hi everyone, today I'm going to present the study about the determinants of the capital structure of Spanish and Portuguese listed companies. First, I will make an introduction about the problematic in study. Then, I will talk about the factors that influence the capital structure. In the third point, I will present the objectives and methodology of the study. In the fourth point, I will present the results of the study. And in the fifth point, I will talk about the conclusions of the study. Myers, 1984, associates the problematic of the capital structure with putting together a puzzle with a set of difficulty pieces, and for that reason, hard to know why companies issue stocks, bonds, or a mix of this class of securities. The capital structure are explained by specific factor companies and country-specific factors. The specific factors companies are aggregated by theories, like trade-off theory, agency theory, pecking order theory, and market time theory. For the other side, the country-specific factors are subdivided in macroeconomic and microfinancials that together influence the financial systems, and the financial systems contribute to the economic growth of the country. The role of the financial intermediaries contribute to reduce the transaction costs, information costs, and intervene in capital market. When you talk about the trade-off theory, we have to talk about two different points of view. First, we have the static trade-off theory, and is based on the existence of tax, bankruptcy costs, and agency costs, and argues that optimal leverage is based on a single period of time. But with the introduction of expectation, uncertain, and transaction costs, we talk about the dynamic trade-off theory that tells us that the debit behavior is continuing on time. The agency theory is based on information cost between the principal and the agent that leaves two kinds of problems, adverse selection and moral hazard. The pecking order theory tells us that first, companies choose internal funds to finance the investments. In second place, they choose debit. In third place, they choose issues of funds. And the fourth place, they choose issues of shares. The market time theory tells us that managers analyze the condition of capital market and timing the issues of new shares, based on symmetric information and stock market mispricing. The objectives of this study are analyze the influence of specific factor companies, examine the influence of macrofinancial factors of countries, and review if there is a predominant theory to explain the capital structure decisions of companies. The determinants for company-specific factors are tangibility, intangibility, dimension, profitability, flexibility, liquidity, and market-to-book value. For the macro-financial factors are stock market capitalization and bank deposits. In this study, we use dynamic estimator, GMM Sysmans and Bruno 2005. In the sample, we use 77 companies for Spain and 35 companies from Portugal. In this table, we show the results for Spanish companies and for the Portuguese companies. This table shows the sinks of the results for Spanish companies and Portuguese companies. The results indicate for Spanish companies the existence of a positive relationship between debit and leverage of last year, tangibility, and market to book. The results also indicate for Spanish companies a negative relationship between debit and intangibility, profitability, liquidity, and stock market capitalization. For Portuguese companies, the results indicates the existence of a positive relationship between debit and leverage of last year, tangibility and intangibility, and the result indicates the existence of a negative relationship between debit and profitability. Conclusions for Spanish companies. There is no predominant theory. The transaction costs influence capital structure, but with a smaller magnitude than Portuguese companies. Market conditions contribute to increased debit. The agency cost and the informatic asymmetric cost influence the capital structure. Development of stock market contribute to decrease the leverage. For Portuguese companies, there is no predominant theory. The transaction costs influence the capital structure. The agency cost and information asymmetric costs influence the capital structure, and the macro-financial factors do not influence the capital structure. Thank you for your attention.